Just as I expected, well, we're having a slight pullback in gold and silver prices, but only slight. Really, we could call this a stall in the gold and silver rally, which likely will continue. At least I think it will. Of course, I could be wrong about that too, but we're going to discuss some of the reasons why I think it could continue and more as we explore. That's right, gold and silver have taken a little bit of a pullback, pretty much to be expected, but not by much today. In fact, silver is still flirting with that $44 mark. It is below that number moments before these markets close up for today. In fact, what is silver doing? Well, it's down 0.3%. Down 13 cents. In fact, here is the interesting and fascinating aspect of it. It did not fall as much as gold did today on a percentage basis. Gold is down $32.10, down 0.85% to $3,733. That means that the gold and silver ratio has narrowed slightly to 85.14, still very high. And I think something that I think should be a whole lot narrower than where it is. I think most of you would agree with that synopsis here. All the other metals are down too. Platinum is down $1. Palladium is down $10. Rhodium is the only metal that went up today. It's up $125, up 1.81% to $7,475 an ounce. But in these pullbacks, that's the time to kind of think about making a purchase. And my friends at Summit Metals, they have a growing selection of bullion and also collector pieces. So check them out next time you are in the market for buying precious metals. They also will buy metals from you as well. You can sell to them. Check out their Sell to Us page. It shows the process and steps involved in that. But nonetheless, somebody asked me in a comment recently, should I start really stacking a whole lot more as this rally is continuing? They're a beginner stacker. And my advice to them was to, stack based off of your own understanding of the markets and what's comfortable and right for you with your budget. Really, it defeats the purpose of going all in and buying a whole bunch of gold and silver, thinking it's going to continue to rise and going into debt to do so. You don't want to stretch yourself out thin no matter what. Every ounce and every tenth of an ounce that you acquire is a whole lot more than most out there in the country and world for that matter. But nonetheless, so what's happening here with the markets? Well, we're seeing silver taking a little bit of a pause here today. And silver prices edge lower in the session today, pausing just under a key resistance zone after hitting a multi-year high of about $44.47. The pullback affects a consolidation phase rather than a reversal as the market prepares for a series of major economic events, which includes Friday's PCE inflation data and potential government shutdown concerns. So that's a domestic political situation that could have an effect there. Now, the PCE data, I think, is the preferred measure of inflation that the Fed uses. That's going to give us an idea as to what they're going to do with regards to rates. And so the short-term range now stretches from $41.14 to $44.47, a pretty wide gap. That's a more than 50% retracement at $42.80 as the immediate support to monitor. $42.80 is still very, very good. Yes, indeed it is. And that's setting the fifth. That's going to remain strong at these levels here. I'm going to keep an eye. Now, the other thing we're looking at is what the Fed is going to do. Gold often takes the spotlight during Fed-related events. Silver has been riding its coattails, benefiting both as a high beta precious metal and a play on structural demand from electrification and photovoltaics, according to FX Empire. Fed Chair Powell's recent comments flagged a no-win policy setup, noting inflation risk to the upside and employment risk to the downside. Following the Fed's rate cut last week, traders are pricing in 2 additional quarter-point cuts this year, with a 93% chance in October and a 79% chance in December. The bond yields, remain sensitive to upcoming data, with the 10-year Treasury yield ticking up to 4.13%, and the 30-year at 4.74%, limiting silver's upside at this point in the short term, but failing to derail the broader bullish setup. And I think there's a lot more that is on silver's side, including the supply-demand fundamentals that we've been talking about for a long time. We're in the fifth year of a shortfall in silver to meet the supply, to meet the demand needs. So the dollar index as well is something also watching, and I'm looking at it right now. And the dollar index indeed is up today. It's up 0.65 to 97.88. And this is rebounding from earlier weakness that we saw. But silver's resilience suggests safe haven positioning remains intact. Continued geopolitical tension and dovish Fed expectations are offering tailwinds in precious metals despite the strength of the dollar. Even with German business sentiment deteriorating, silver maintained its footing, reflecting broader global uncertainty. Remember, because of the vast amount of versatility in the silver industrial space, in other words, it's got over 10,000 use cases, and there's a good portion of those, which, by the way, are recession-resistant and or maybe even recession-proof. There's government mandates for green energy, not only here in the United States, but around the world. And I think that is going to bode well for silver demand and silver's price. The fundamentals there are certainly strong. And of course, we know we got the situation along with the COMEX and the LBMA, and that is still a concern. There's still some things where the silver market is generally kind of out of whack to an extent there. Now, we're looking at this PCE data, the preferred inflation gauge, which would reinforce or weaken the case for additional rate cuts. A soft 0.2% month-over-month reading would likely pressure the dollar and reignite momentum in silver and gold. Additionally, concerns about a potential U.S. government shutdown are keeping investors on the defensive. And that, by the way, includes also for gold, too. But I think silver really is being very, very shy about moving down a whole lot in this little pause and this little bit of a consolidation period. But we see that silver remains in a bullish technical structure, though, above this $41 range, with buyers stepping in on the dips. A break above the $44.47 would clear the path for the next major upside target. And that is a massive shift from $44.47 from the technical outlook to $49.81. Wow, that's a big side, and I don't know how they're getting that from the technical side because I'm not really playing that world a whole lot, but I'll take their word for it. That is pretty big. $46 I've heard is a real big, strong resistance point as well. While consolidation is expected ahead of the data that are going to be released on Friday, structural demand, Fed policy shifts, and geopolitical risk continue to support a firm bid. Now, so that's that information. We're also looking to see what is being reported as well in other areas with regards to gold. And there's an article here that I just had up from Reuters. But stocks are falling as the dollar rises, gold falls with the Fed rate path in question. MSCI's global equities gauge stayed close to flat on Wednesday, while the dollar rose and gold prices dipped as investors digested cautious comments from the Federal Reserve Chair Jerome Powell when the central bank might next cut U.S. interest rates. In his first remarks since the Fed meeting ended with a rate cut last week, Powell yesterday underlined the need for policymakers to balance the competing risk of high inflation and a weaker jobs market in their next monetary policy decisions. Traders were still pricing in a rate cut in October, as I discussed previously. So that is what we're waiting for. And in a sense, that is kind of, we see some profit taking. We see cautious optimism in the precious metals market, but you never know. It could lead to that data being released to a big Friday smackdown again. A lot of data gets released on Friday, by the way, enough to cap off what's going on during the week, which means that natural market forces, I think, in a sense, do play a role, even if you believe there's suppression happening as well. But nonetheless, fascinating indeed. Fascinating for sure to see how these things are moving. But I think generally the sentiment overall is that this is just kind of a pause. It's a stalled in the rally for a moment, and then we're going to see it pick back up again. And I fall in that world too. Now, I also want to be open-minded about the possibility that we may be disappointed, and this could be a longer pause, a longer stalling, and a dip and a pullback to numbers that may disappoint some. But I think in the end, I think even if we were to see silver fall below $40 again, and gold fall back in the $3,500 range again, that would not be a bad thing, because we could start to see the consolidation of those price points. We have become so spoiled, I think, to a degree, of where the markets are and how they have moved so fast, with like $1 a week in silver and gold just scraping past new all-time highs yet again, that we're just like, we want more. It's like an adrenaline rush. But in reality, that's really not how it should work in the precious metal space. And some of those factors have got to give in one way or another. So those are the things we have to think about and keep in mind. Gold and silver remain the same no matter what the price does. There's more to gold and silver than just its price. And for me, I'm buying and I'm holding for the long term, because I have what is known as, a phrase that I've coined, diamond fists. Holding on with tight as a fist. Yes, indeed. So there you have it. Let me know what your thoughts are in the comment section down below. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.